We were looking at a daily chart of the Nasdaq from August in 2003. I just wanted to show this to you because this is a bottoming process of the dot-com bust, where the Nasdaq lost like 80% from 5,100 down here to 1,100. But I just wanted to show you the bottoming process here, 8 to 9 months of just pure grind. This is not a V-shaped recovery. And typically when the markets bottom in 2000 and 2009, 2008, 2009, it's a process, not an event. So those who just got into the market and think this is going to be like 2000, we're just going to go straight back up again. It's not going to happen. This is not different this time. This is typically what happens during the the bear market. It takes its toll. And this is 2009, 2008, 2009. And you can see again here that it took a while for this to bottom here. You're looking at 3 legs down too. I'm looking at the 3rd leg down, which is what happened here in this is 2022. Okay, we're just going to go to 2022 here. Let's go here. I want to show you this. Hold on, I'm going to show this to you. The 2010, where it definitely had the 3rd leg down here, but it grinded here for like 3 months. I mean, 9 months, 8, 9 months, just like in 2000. All right, here you can see this bottoming pattern. And it takes a long time here for this to make an official bottom. This is a long period of time. Tom Canfield, Canny, 7-month pure grind. It's at least 7 months. So the point is that it's not an event, it's a process, and it's going to take a long time, and it's not different this time. This is a bear market. We won't know until after the fact, but I'm thinking that this is like leg 1, and then it rallied back up, and now we're in the middle of leg 2, and we might get a nice rally back up, past 1,300 before we take our final descent. Anyway, we won't know until afterwards. Some people think that this is already our 3rd leg down. If we have this leg, and then we had this nice little run here, about 1,500 points. Then we had a 2nd leg, and then it came up, and now this is the 3rd leg, and we bottom. So like I say, we will not know until after the fact, but I am not the type of person who's going to try to catch a bottom. This is the current Nasdaq anyway, showing a lot of weakness, way below its 200 simple moving average. It has not been below the 200 simple moving average for this long since 2009. It has been this far beneath the 200 since 2009. I think it was about 24%. Now it's 18.5%. It's like 700 points off the bottom. But anyway, this is a risk-off environment, so you can expect IWM to be one of the weaker indexes, and it certainly is. Let me pull this down here. And this is what I think is this is your 1st leg, then a little weak rally up, and this is the 2nd leg. Shows it a little better here, because this is not enough or long enough to be really considered a bear market rally, although it did get above its 200, unlike the Nasdaq. And then the SPY is holding up better, obviously, because it contains the commodity stocks. And this was enough right here to fool people into this little double bottom here, to fool people think, oh, we're off to the races again. We're in a power trend. And then what happens? Boom. 2nd leg gotcha. So anyway, I want to take a look at some of the leading stocks that I think, are okay to hold. They're trending above their 10, their 21, their 50. Devon, certainly one that's trending well. Oxy, the Warren Buffett stock, trending well above its 50. Found support here last week. It found support a couple times here recently at its 50. So that's an area of support for Devon, and same with CTRA here. It just finds support when it trades down to its 50. Came down last week a little bit, then popped up. So those stocks are looking well. CVE is another one, finding support at the 50. There's no reason to sell these. I wouldn't be buying them here, but I don't think the Nasdaq or the index or the stock market sells off until these things crash and burn. And so that's why I'm watching the commodity stocks so closely. To me, this Chevron looks like a climax top here. It had this tight trading, then it had this level of trajectory of ascent, and then it just went straight up. Now it's in this trading range, but I'm watching this one closely, because if this one gives way beneath the 50 here, then the commodities certainly could roll over. A couple chemical stocks that I'm looking at. This one looks pretty good. Olin, it's trading above its moving averages and trending nicely. And so is the Chemours company, which has been in a long-term consolidation pattern. You can see here with the RS line trending higher. So those are the stocks trending higher. If you want to look at, what happened to past leaders, the 80-50 rule, 80% of past leaders at top, they go down 50% and 50% go down 80%. And here's Moderna, had this nice little ascent, was tracking well in 2001, then it just went vertical. What happens after it went vertical? Sells off, tries to rise above its 50, sells off. And now it's just a short play. Same with Upstart. These things topped here, had this nice little trajectory of ascent, and then just goes vertical, sells off, slices its 50. By the way, you have to sell these stocks when they slice their 50. You got to have rules here. I sell if I'm down 5% or more in any stock. I don't care what it is. And if they slice their 50, it's adios muchachos. You could have sold here at 300 and saved yourself all this pain. Same with AFRM. It's the same deal here. Was cruising along nicely, went vertical, and then just sold off. Steady sell off. Now every time it comes up against its moving averages, it's just a short. This thing right here, 86.6%, below its high, so they're all off their high. CROX, same thing, was a leader, had this nice little trajectory of ascent, came here and then boom, just went straight vertical and sold off. Sliced to 50, that's where I sold it. Saved myself, 100 something points. AMD is another one, which traded a little erratically right here. It had this nice breakout, then came back and formed this little consolidation, but then went vertical and topped here at 160, sliced its 50. You got to sell it there. Sorry, 140. Now, you're 45 points to the good. It has shown life lately, great leadership. They acquired Xilinx, but these things have topped, and I would stay away from them until they improve themselves here. 42% off the high. So anyway, those are the top stocks. I showed you the index. I showed you the leaders. I showed you the top stocks. Have rules. You got to sell. We might have a bear market rally this week, but I'm actually looking for this third leg down on the Nasdaq. I'm calling this one leg, and then that's your little bear market rally up near about 100 points shy of the 200. Then this is your second leg down. I expect another nice little rally, maybe up to the 50 before it gives way. Because if you look at the weekly, you look at the weekly and the monthly, actually, let me get rid of this. This is your pre-COVID. This is your pre-COVID level right here. And this is before, the monetary and fiscal policy just went berserk. And a lot of people got into the stock market right here and thought it was easy. Oh, geez, you just buy here, it goes straight up. Well, no, it doesn't. This game is tough and it's not easy. If you look at the Nasdaq from 2009, the breakout 1200 up to 16.2, that's a hell of a run, right? You think we're just going to give a couple thousand back? Probably not. It's probably going to come back to this level here. I'd say just above 8,000. I would think that would track on these lows here. Yeah. So I think we have a ways to go down, but I could be wrong. Take it one day at a time. But a bear market rally, sure, it's tradable. You can take advantage of it. You can buy these stocks like Roku that are bouncing, off these lows here, and you can make 20% in a day. That's great. But when they hit up against these moving averages, those are shorts, and they're just being rejected and selling off and trading lower. Anyway, we never give up.